Arbitrage trading, I will admit, is one of those kind of complicated and difficult subjects, but seeing as you're watching me, you're not really afraid of that stuff, and I think you'll probably do pretty decent with it, or at least have it as a nice little tool once you get a handle on it. This is probably going to be like a three-parter situation, but obviously you don't have to use all of it. You can grasp some of it and use it to adapt to certain scenarios that you see might be fit this type of situation, right? Or whatever type of opportunity you see. It's kind of like that part of the movie where at that critical moment where you pull out that MacGuffin and kind of save the day. Speaking of plot devices, you might want to hit that red subscribe button as well as a like on this video and share it, and try to convince someone else to subscribe to me as well. So the first type of arbitrage is basically what's known as pure arbitrage, and I think it's best if I illustrate this. This is a very basic, quick example. I'm leaving out some of the nuance there, but essentially, if you see this toy here, it's going for like $122. If you were to source this, you would only have to pay about $74, making a difference about $48, 50 bucks, something like that. And that would be your profit. And that's kind of a real world example where you're buying and selling the same product essentially, but on two different venues. And whatever the net difference in between that is the profit you keep. Now, this is the part where I know most people get huffy and puffy and say like, you can't do that. You're not a hedgie. You can't do that. You can. It's called Interlisted Stocks. This is just a random website. You can use whatever you want, but this is showing that in terms of interlisted stocks, they have American and Canadian on here. So what that means is that they're both listed on the Toronto Stock Exchange as well as the American stock exchanges. That's just one example. There are a multitude of other countries, South America being another big one as well, where they have interlisted stocks in their home country as well as the New York Stock Exchange. The way to kind of visualize this is to picture about two parallel lines. There's a dollar spread in between. Let's say this is stock A, your home exchange, and then the blue up here is stock B, the foreign exchange. There will be slight little sort of like out of sync variations that happen. And the reason why this happens is because there is currency fluctuation. These small little blips of currency fluctuations are opportunities an arbitrager can kind of capitalize on, because as you can see in the example here, this is like kind of like the best case scenario where your local home exchange, it suddenly becomes slightly overvalued, right? And that spread suddenly starts closing. So now you would basically sell from your home exchange and then buy from the foreign exchange with the idea that this is going to go back up, and then this is actually going to go back down to try to maintain that similar symmetry of a dollar. Outside of the small currency fluctuations, which I think you can kind of take slight advantage of, but the opportunity doesn't exist for very long, obviously, right? So speed is kind of a big factor in this game. But there is a very rare scenario out there where, in terms of the speed of information, you can kind of take advantage of. Again, it's super rare because most of the time these institutions have the best access to information, people, etc., resources, whatever, you name it, right? But I'm not saying it's impossible for like some random person to post something on social media about like smoke clouds in the sky or whatever, right? And then, you know, the smart money in North America finds out, and then they start moving towards it, and then obviously then you find out or whatever, right? Somewhere in between that mix, the foreign markets might actually not know about this, and you might actually get ahead of them. It's very rare. It's very rare, and it has to be one of the worst picturesque doomsday scenarios where it happens, where you can actually capitalize on that as an individual retail investor. So that's the first part of arbitrage. Anybody that said trading was simple has never encountered certain more elevated topics such as this. And I'm not saying that as an insult. I'm just saying finance is a really complicated space. And the second part of this, I will talk about merger arbitrage, which will hopefully, if I remember to put into the next video over here, I might make a playlist or whatever. But for this video, for now, you know, just remember, just because you're a day trader doesn't mean you have to trade every single day.